Hey guys, this is Simon with Trade and Perform Coaching, and I'm going to do a review of the levels, do a little bit of profile work, and kind of get prepared to have a great week for the upcoming week, right? Step by step, get my focus in at Sunday evening about 10 o'clock. Family's asleep. Just want to get my footing down and ready for a really solid week mentally, emotionally, focused on moving my C to A game, meaning the things I did most poorly, I want to improve on this week. And then my A to A plus game, right? Things I did well, I want to do more of. So we're going to start the week out with, first of all, reviewing Friday's levels. Just a quick note for those who'd like to join us in the room, check out the room. You can join us at tradeandperform@gmail.com. Simply send an email, TRADE, the letter N, PERFORM @gmail.com. And I am more than happy to extend your 3-day pass. The cost of the room is $95 a month. If you would like access to the live trading room, live market commentary, levels before the market, and team in the team chat where we help each other out to achieve profitability. If you'd like the algos that we have in the room, it's $250 a month. Very straightforward and nothing to hide. It's for serious traders only. So let's get started. Let's start with NQ, then we'll go to ES. So you'll see NQ actually opened up with quite a bit of sell pressure here. So this is where we open. This is 8:30 in the morning. This is clear potential open drive lower. What was the clue that we weren't going to have open drive lower here? We could not get below prior day's low, which is what this is right over here. I'm going to give you a little bit bigger picture of the whole scene. Uh, we opened up below the volume point of control, which is this blue dotted area, right? There's a weak anomaly right here that we opened up at. We drove through IB through Thursday's IB low, right? We came into the zone. Now you'll see these are 15-minute bars. I want to show you something. There is rotation here, and I'm going to show the rotation. And in order to do that, what I'm going to do here really quick is I'm going to change the bar period to 5 minutes so you can see it. I use the 15 minutes because it gives me more information. I already deal with a small enough time frame with regards to the algo signal. So, but this will make it a little bit easier for everyone to see. So let's see how many days we have to load here really quick. Shouldn't be too long. There we go. So when we take a fresh look, we dump back here really quick, and I'll do the same for ES in just a moment, right? So a couple things I want to keep my mind on. First of all, this is potential open drive lower. You can see at the zone, see how we wick off the bottom of the zone. They hold that zone 5, 10, 15 minutes. This zone actually holds. So did the zone do its job? Darn right it did, right? The other thing to remember is you didn't get a significant rotation out of here. If you're a scalper or a trader, you did get a 10 or 20 point rotation out of here, but you really didn't get a push out. So anyone who was looking for a larger trade is stuck at this location. We come down, we test prior day's low right here. You can see we just traded underneath, and then we get a responsive buy. What's your target back? Your first target back is 14,364. Why that's an anomaly? And you got to remember in your head, traders are stuck there. What do traders do? When they are stuck, they wait for it to come back and they puke back out their buys. They say, thank you very much. I wanted to get out. We come up here. We consolidate for 20 minutes, right? Then we push out to value area low where we find responsive sellers where back into the anomaly, right? So I see so many traders that want to know where the market's going to go at the end of the day. But if you're a day trader and you're using leverage, you've really got to be able to negotiate the little ins and outs of the market. That's just all there is to it. If you're using leverage and you're an active day trader, you have to understand how this stuff's going to revolve. So now remember, people sold here. What are they going to do? Remember, if they bought and they're stuck here, right? If they sold and they're stuck, they're probably going to buy when it comes back. That's how the deal works. They buy, they punch through value area low. We come back to retest Thursday's first hour low. And you can see that we got responsive sellers there. How do I know it's a 5-minute stick and I get a wick there? Somebody sold, right? I don't have to be a rocket scientist to figure that out. Then we come up and we are now going to go and test. We're now going to go test. This is 940. This becomes the first hour high for this day. So after the first hour, I now switch from looking at Thursday's data for the first hour high and low to Friday's data for the first high and low. We attempt to punch above, find responsive sellers. Responsive sellers tuck it back into this weak anomaly, trap back in to the high, and where does it roll back to? I would normally say that target's back to 14,389 there in the morning, and you can see that's exactly where we rolled back down to. You can see they tried to hold um, prior days uh, value area low. Finally make it just to miss this anomaly again by one tick again. When you leave an area behind, you got to expect responsive buyers. They try to make it back up here. It gets pretty choppy. I'm already done with my day here. We got paid pretty nicely actually on that long to the long side. Now you can see again, guys in the room, this is really important, right? See how we took out the first hour high earlier? That's already been taken out, right? So go look at what they take out next. You just got to recycle your brain to think we're going to want to take out stops, right? This whole market, all of day trading surrounds taking out stops. We take out stops by a tick. Again, you would have seen that on the 15-minute. Trap back in. And now where does it want to come back to? Well, the answer is probably for a second test of this 50-60 retrace from here to here, which this was. We come back, and then where do they want to take out the low? They want to take out the low of this bar, right? And as you'll see, and so you can see, so the part of the process here to understanding where the market will respond is you take out the low and see the immediate response. Remember, this is a 5-minute bar. That's a small fortune if you're day trading. That's 14,387 to 1405, right? That's almost a 20 point. That little bar is a $400 a contract rotation. You've got to remember, day traders make their money between the sheets, between the top sheet and the bottom sheet. I mean, it's a really thin place where we make our money. You don't have to capture these giant moves. It's great if you can. I certainly try to, but I don't have to get paid, right? I have to have precision to get paid. And then in the afternoon, as you can see, we finally make it back into that anomaly. We find responsive buyers. It's kind of a really poor attempt back up. We get underneath, and they just kind of chop through there until the end of the day. And finally, at the end of the day, you can see we finally made it below prior day's low, and we take out the first hour low. See that right there? That was this orangish, reddish arrows here. That's the first hour low. We take it out by a tick with about 10 minutes left to go in the day, and they respond back up. I don't trade that, so whatever. It would have been nice if they hit it earlier. And that amounts to, when you look at that day, that is a balanced day. They kind of did a head fake open drive lower. And then, again, that's what I'm saying when you want to find the best trades. If you look on the day, the best trades on a balanced day are at the edges, right? Outside edges, back in. Outside edges, back in. Outside edges, back in. Where's the worst place to trade on this? Usually it's right in the middle of the range. When you know these things, it shouldn't be any kind of ooh-ah moment. If you're day trading, this should be like, oh, boom, I understand this. This is straight out of Mind Over Markets, right? And Markets and Profile. This is how markets trade. If you don't know this stuff, right, you should hit the pause button and go learn it. And no BS. You're trading against the best traders in the world. I'm not playing around. I'm totally serious about taking your money, and I'll tell you that right now. And I'm not talking about room membership fees. I'm talking about taking the other side of your trade when you screw up. And I'm much better at doing that than most people are. So don't come into the game thinking it's going to be an easy game. Just don't do it. Know your stuff. If you don't know this stuff, it's like going and playing football, not understanding that there's 4 downs of football, or playing, European football, or as we call it in America, soccer, and not understanding there's 2 halves to the game, right? You've got to understand that there's a goalie. This is basic stuff. This shouldn't be stuff that you're trying to learn. And that right there, that balance day information, is basic stuff. Let's go look at now how ES did. And again, it's the same principle, right? So I'm going to knock this down to a 5-minute chart. Let's see, bar period. Let's knock it down to 5. Nice cool evening here just outside of Dallas, Texas. Let's wrap it down. And you'll see we had a very different market in ES from NQ. So again, that same pretend kind of open drive lower here on ES, you can see ES had a lot more get up and go than NQ did. So here's the pretend open drive lower. We busted through Thursday's um, initial balance low, right? The first hour low from Thursday. Drove down. Now this, I want to address this to members in the room. This was the volume and TPO point of control. Guys, so I'm going to go back to an example I give all the time. That tends to be generally a very difficult place to trade. It's a great target. It's a difficult place to trade. This is an example where a rule can kind of step on your own. You know, the rules kind of get you goofy footed. That was a long location. You had to know it was going to be going up. For me, I don't like trading. I don't like trading inside the prior days um, volume points of control and TPO points of control because it's too choppy for me generally. That for this particular day tended to be, this day was a good trade location, but generally it's not. Okay, so I want to explain that. Generally it's not. You just have to make a decision whether you're committed to taking losses or not there. I find over 100 days I take more losses than wins out of that location, and it puts me in a compromising position to want to take a trade in that location. So I don't. I don't have another way of answering it. If someone asks me whether it's okay or a good idea to trade inside the point of control, I say it's not because it gets too close to a 50-50 win rate. But this would be a day where you look back at it and you go, geez, I wish I traded it at the point of control. Didn't happen. It actually set up on the algos. And I don't have a better answer than that. I don't trade it because I find it easier. There's so much gray in trading that's easier for me just to walk a black and white line. Now, going forward, you'll see how much different ES was versus NQ. So first of all, you'll notice when we look at the day, notice NQ closed near the low of the day. ES couldn't get anywhere near it, right? Secondly, look at the response and the push out here. Back to prior days, first hour low, right? Now we've established first hour high, first hour low. Remember, that's highly likely to get broken, one of the two. It gets broken, and obviously there was some kind of news there. We drove straight through into the anomaly. Now remember, an anomaly, a yellow zone is strong. You would normally expect to push in and reject out, right? I'm not the only one expecting that. Look, when I put that zone up, it's because I know other people are looking at that area, not because I have some kind of genius insight. I'm following the rules for putting up zones in mind over market, right? So this isn't a valid anomaly. It gets blasted through. But one thing we do know, if a zone gets blasted through and comes back, sellers that were in that area will turn buyer most often, right? 70-75% of the time. Backside test, response to buy, push, and where do they try to get? Back to prior day's high. You can just see NQ was weak all day. ES actually had some strength in the first half of the day. Couldn't get to the high. Again, the same principle right here on a 5-minute, or whether you're looking at a 5-minute or 15-minute. Takes out the high, right? So this is a good example here. This is the first hour high. We take it out, right? No responsive selling, right? So remember, this area, this would be a place where there were sellers there. And why do I know that? Because when we come back to retest the first hour high, we found responsive buyers in that area. This is a constant seesaw, back and forth. If you haven't trained your brain that this is how the market works, you're really on your back foot trading. Before you even get to the algos, these are very basic principles, very basic and important principles to keeping you profitable. We take out the high over here, right? We come down, backside test. This sets up a head and shoulder on almost every time frame that we look at intraday. Again, off the right shoulder, that's where your strongest opportunities are. Push into the zone, responsive buying. We finally break. So remember, this got a response out of this zone, but it wasn't very strong, right? Anyone who didn't puke pretty early, like if there was guys looking for trend day up, which I know there always are, that would have been your target up. They are stuck. We come down. This is a 50-60 retrace from the low, right? 50-60. Push back up. Again, this is another 50-60 from the high into the low, rejected. And remember, buyers got stuck here. What are they going to do? Puke it back over. Puke it back over. Back inside the opening range. That's about a 62 to 786 retrace, and that's where we kind of ended up today. That's how the day loaded out. If this is complicated to you, right, you've got more reading and more work to do. And here's the deal. I've put my years in. I've been doing this for almost 25 years. I put in my long weekends, I put in my long nights, I put in my tears, my blood, lost capital, made capital, frustration, pulling hair out, you name it, getting unbalanced mentally and rebalanced mentally. This is hard stuff. If this is where you're at trading, you've got a lot of work to do, right? If this is a struggle for you to understand why we're responding back and forth, this stuff should be a snap because all your decisions should be focused in on trade entry, exit, execution. And if this stuff doesn't come as a background information like driving a car, day trading is going to be a big challenge for you, right? If anyone says it's easy, it's not. You've got your work cut out in front of you, and you should get to work as soon as possible because the money is there for those who break through and do the work and get the understanding. But it's multidimensional. You're playing chess on 4 levels with multiple time frames, right? So let's go look at the profile for going into the European session tonight and for the U.S. session. Now, I only profile off of U.S. session data. I've got to find my chart here real quick. Let's see if I can dig it up. I believe this is it. It's hidden all the way over here. We'll drag it over. And let's take a quick peek. Again, understanding profile is important. We'll start off with NQ profile, then we'll go do ES profile, right? So first of all, let's get rid of what we don't need in here. We don't need this. We don't need this. And the rest we will clear up. And we don't need this. Interesting that we haven't been able to make it back into the mid. This is a prime target, that 14,720, back to the upside. For those who are looking for a slingshot into earnings, that's what you're targeting to the upside, is that 14,720 mid of the half gap, and then Dalton's gap fill. Let's go move things around, shall we? So slightly new low on the day in the NASDAQ. Value shifted lower. That's value. The purple line is value area high. The other purple line is value area low. This is the blue line is the TPO or time price point of control, and the little gray line there. So on the right is the volume point of control, and the left is the TPO point of control. I favor TPO, except for the volume point of control from the day. I favor that. This is going to be the target back in and out for the day, but it's one of the worst locations to trade. You can see we're trading underneath right now, underneath Friday's low coming into the week, but we are into support right now at 14,270. Actually, we're under support. I'll take it back, 14,270 to 14,244. So apparently they're doing a little bit of beating up of the market right now. Let's go, and we're going to copy this. Prior day's high, prior day's low. This is now a 24-hour-old location. I'm going to change this to orange, so I know instantly, hey, that's a prior day's high that's more than 24 hours old. I'm looking for exhaustion patterns, particularly head and shoulders, out of these locations for breakdowns back to the inside. This is a prior day's point of control. It's a little bit behind that anomaly. Also, that's the settle price, at least the way I calculate it, that 14,540, which is an open retail gap from the 7th, right? So you'll also see we have an anomaly that's outside of value, right? The green area is unfair pricing. The blue area is where we have price acceptance. So I'm going to throw a zone up right there, that yellow zone. It's not quite a white zone, it's not super clean, but I would expect resistance to that 14,460. This is my targets back in towards the volume point of control, and I don't have anything on the edge. And this, by the way, in my book is a poor high, both at the high and the low, meaning we didn't have any excess. This is excess here. When you look on the edge, there's excess there, meaning that we pushed, not much volume went off and snapped back in. We know those are generally good lows. We got pretty sloppy lows on both ends. Usually you'll get excess on one end and poor high or poor low on the other end. But all three of these, 1, 2, 3 days of poor highs, We had 2 days of excess, but now they've clearly gone and broken that. And if we look below on this profile, we can see there's still what calls out to me that needs to be changed up now that we've gotten past that 14,244 is we've gotten into, there's this prior day low at 14,181.75. There's an anomaly. Guys, you got to stretch this anomaly down to this 14,120, at least mentally in your head, even though the anomaly does end at 135, because these are the beginning of the single prints. I'd expect a response off the top. Certainly a response off the back at that 1400. It's 14,000. It's a round number psychologically. Behind that 13,995. And all that means is when I get behind these numbers, I'm looking for the obvious answer is head and shoulders to give me a right shoulder to work off of to push to the upside, right? That's what I'm looking for. Waves to the low. Guys that are in the room knows what that means. I'm looking to trap sellers down there, get above them, and use that energy, that fuel to push back towards the mid of the day or the prior day's high. And those concepts, if you don't understand them, they're really, 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 really important. You should come in the room and learn them. They will make a massive difference in your trading. So when we look at the chart, let's see how the NASDAQ on a 5-minute chart has been trading this evening, because that's what the levels are going to look like. I'm going to erase the lines here. Okay, and now so we can see this evening, Sunday evening, we opened up inside value, kind of dive bombed here towards the opening of the Asian markets into the zone, found responsive buying, back up, backside test prior day's low, and now we've dive bombed through. Remember these zones, first time's the strongest, second time's okay. Asia didn't seem to think so tonight, and then through, and now obviously there was buyers in here, right? They're stuck. You gotta remember, first time in for scalps, right? Possible rejection and pushes back down, right? And then below 14,181, my target's back to 14,244, and then perhaps 14,309. I don't trade the Asian market, and I'm going to wrap this up so I can get to bed. So those are the levels. The only thing I'm going to do here is adjust for my value area high and value area low from my IB, excuse me, my IB low and IB high. Let's make that white and dotted. I wanted dots, not dashes. There we go. And we'll do line width, pump that to a 5, right click, copy window, copy and move, and then we'll take that right there. Yesterday's low again. That was Friday's IB low, and those still stand as important areas going into the next day. We're going to save this chart, and then we'll pull levels up above and below. So let's get the extension. Let's say 14,640. That's about 400 points from where we are right now. And then 400 points down gets us down to this. Let's use that 13,720 as our extended level down. Kind of move this around like, let's see, 14,200, 14,640. And that's kind of how we'll leave our charts for tonight. We'll see what's what in the morning. Let's edit. Copy chart to BMP. I'll save as JPEG. And now I'll post this to Twitter. Let's see, we have Q0411. So I'll first post it to the room. And then I'll post it to Twitter. this. There we go. And then let's go and do ES, shall we? And if you're bored, you can drop off, but this is good stuff. Wow. Look at that move to the downside. Let's look at that move to the downside overnight here. Let's see if that even set up for us. Let's see, Asia. Where's your stopped out guy? Right over here. Here's your last seller. Wow, look at that. They tried to hold that line in the sand. As soon as they cleared underneath the line in the sand, down it went. And yeah, it doesn't look like it stopped out on the edge. You did get triangle up, triangle down. Didn't set up on the 24. Let's see if it's set up on the 20. Same picture. They didn't stop anybody out on the right. Look at that. They just didn't stop any of the guys out. You had a no supply, no demand. Point of control underneath. And then triangle up, triangle down right there on the edge. And then your last seller, the last guy, the last buyer who got stopped, and then they regained them, was this guy right here. Multiple ways to have gotten short in there if you wanted it. And then they did the courtesy of backside testing them before they dropped. So, my guess is most people were trying to come in for this retail gap, and they kind of got surprised there by the veracity of that drop. So, no big deal. I'm not in a position to make any trading decisions right now. I'm tired, and I just wanted to make sure that I wasn't starting on the back foot tomorrow. So let's go get an ES profile done real quick here. And you can see again, ES, the profile is just quite different. The whole thing looked different on ES than it did on NQ. So the first thing we do is we go get rid of what we don't need, and then we move around what we do need. So let's see if we can't fix some stuff up here real quick. So first, it was an inside day on ES. That's interesting. Totally different than NQ. Again, means that we weren't able to trade above or below Thursday's high or low. This goes to orange, depicting that we had a prior day's high. But actually, guys, what I'm going to do here is I'm just going to trade the line style to indicate that we did not trade above or below Thursday's high or low. So I dash that, and what that tells me is now that high and this low are the important areas on this chart, right? So value area moved clearly a bit. So this becomes value area high, value shifted up, value area low, prior day's point of control, there's also worth noting there's an anomaly right here. So what I'm going to do is wrap that value area low in an anomaly. I would expect an initial response. That's also settle price, retail settle price. Actually, I'm sorry, I made a mistake. A little bit tired. Let's do this. This goes away. And I'm actually, even though this is inside prior day's value area, my natural instinct is to mark this off as a strong support area. That's what I'm going to do. This is the prior day's point of control. Boy, I'm fading fast here, so let's see if we get this down. Then this is Friday's low. And it was an inside move day. Poor low. See, there's no excess there. And then that becomes Thursday's low, so it's still dominant, still very important. I don't want to mark this as blue. We just need evidence. I would suspect at 44.55 to 44.52, even though it's inside Thursday's value areas, it's such a stretch. We should get a response out of there. We'll see if I'm right or wrong here in a minute with how it traded it. We're trading right in that 44.53 right now. I know it's a zone. I just don't know if it's a blue zone or yellow zone, and I'm going to favor the yellow at least this evening. And I think that's it, guys. I don't have anything else to mark off. And clearly, there's got to be stops sitting behind 44.40. That's the swing low from last week. We'll see if they trap. So see all these weak anomalies that we have behind here? I'm going to eliminate those. Why? Because one of two things is going to happen behind here, right? So I want to go through here. So there's a volume point of control underneath. I'm just going to mark that off. It's right underneath. It's untested volume point of control. Just put a question mark on this. It's not blue. It's not yellow. I'm going to get rid of all the anomalies. Because really, if we bust that 44.41 down here, the clear target is these single prints at 44.20 to 44.15. There's a weak anomaly behind that 44.10 to 44.02. And then again, these single prints from like 43.90 to 43.80. Those are the important areas. Let's see what that looks like. And we'll just leave it at that for now. And let's see what our ES chart looks like on the 5-minute. Again, remember, I'll roll this back into a 15-minute in the morning. And you see we're right. You can already see we bounced off that anomaly this evening. You bounced off the low, bounced second time through, so you know people got stuck there the second time. Down into the anomaly, you can see we rotated about 4, 5, 6 points out of that. Now we're testing the back part of the anomaly. Same rule: first time strong, second time weak, and if that doesn't hold, now we can test Thursday's low at 44.44, then followed by, it's really 44.44 down to 44.39 is the support, and underneath that there's quite an air gap underneath there. Let's mark off the IB high and low really quick. IB high. Again, when you just color coordinate these, you don't have to label everything. You know what they are. Now I'm going to lock it so I don't erase it accidentally when I'm drawing. Right click, duplicate, copy and move. So Friday's low, lock that as well. And now my chart's complete. And I'll print these again to the members. We'll get you all the way down to 43.25 in case we just have, let's just take it to 43.80. That's kind of our levels for tomorrow. Let's see, yes. First, see what I did. And then I'll post that to Slack. And okay, guys, that's it. I'm done. I'll see you in the morning. Looks like we should have a good week. Remember, it's earnings week. I expect good two-sided markets, right? Opportunities on both sides. Let's go make it happen. Don't make it happen in terms of forcing trades. Make it happen in terms of follow process, right? I'm going to hammer that over and over and over again until everyone's sick of it. Anyways, I'll talk to you later, guys. Have a great night.